On the show now. Pawan, morning, and thanks so much for joining in. Markets have had a pretty good run. We're just about 2% away from our all-time high levels on the Nifty. The midcap index is up 30% from the beginning of the year. At current levels, how comfortable are you deploying the money that you're getting in, fresh money, and where would you invest that money right now?
Yeah, hi, Rima. Good to be on your show. Very clearly, markets are doing well, and I think midcaps, small caps are even doing better. As far as we are concerned, we see that there is some sort of a euphoric activity happening in select midcap and small cap space, and we are being very cautious on that space now. That is despite at the cost of being, having some underperformance intermittently. We are fine with it, but we are sticking to quality. But at the same time, I must tell you, we're not sitting on some very huge amount of cash. Because as far as, there are several pockets of the economy which are doing good, and there are several stocks which have got very strong growth potentials considering a 2 to 3 year view. So we're not sitting on very high amount of cash in the portfolio, but at the same time, we're being very cautious in stock selection. And that is what our view has been for last 6 months, and at least for next 1 year. That is what the view is. That this is going to be a stock pickers market. The easy money that was there, it's already done, and you have to be very cautious in deploying the money and identifying the sectors and stocks for the next 1 year.
Pawan, hi. So, give us some clues in terms of sectors. Rima just shared your fact sheet with us. I was looking at the constituents. In terms of sector positioning, I think BFSI is a big overweight for you. It's almost 25% of your portfolio, followed by pharma, and then IT comes in. So let's talk about BFSI, because a very interesting sort of divergence has played out. It's been all about PSU banks, for instance. What part of BFSI do you like, and how would you expect the next couple of months to shape out for this space?
Right. So we are actually staying away from PSU banks. That pack has done actually very well. But we've stayed away from that, and we've rather, remain invested into some other names. And I must tell you, when those stocks have done very well. So we've been very positive on microfinance because of all the regulated development that has happened, and whatever, post-COVID stress that was there, that was all over. So we betted on a few microfinance stories. We betted on some mid-sized, fast-growing banks, and all of that has also done equally well. And I still continue to remain of the view that we are among one of the most benign credit cycles, and in that kind of environment, people are actually sticking out into PSU banks. But if you look at the long-term track record, PSU banks haven't been the long-term wealth creators. They are intermittent tactical trades, and that is how we view that pack. And hence, we are very cautious as far as that is concerned.
Okay, got that. You were also mentioning, Pawan, that, there is a bit of a almost euphoric activity in the mid and small cap space. Are there certain pockets within this space that you would absolutely avoid? I know you said that you're not really too much in the PSU banks, but, pockets like some of the railway stocks, defense, some of the real estate companies as well have run up so much. Does that make you nervous to be in those kinds of pockets?
No, actually, if you see, we have actually avoided a lot of that thing. We've completely avoided the railway theme. We are selectively invested into defense pack. And we've seen in last 10-15 years, these kind of things keep on happening. There are intermittent 3-6 month period wherein, you feel a little, that FOMO kind of feeling sinks into a lot of the fund managers and investors, but we are trying to avoid that. We are trying to resist the temptation. Because I think what's really important to understand out here is that, while even the macro theme, I must tell you, the macro theme as far as railways is concerned looks very promising. But it's very important to identify winners. And I must tell you, a lot of these stocks which have done well over the last 3-6 months don't have a track record of being winners for a long period of time. And hence, that makes us very, very, very cautious.
Pawan, you were also saying that you're incrementally turning a little more positive on consumer discretionary. Now, in consumer discretionary, what are the themes that you like? QSR, for instance, is that a favored pick? Because QSR has gone through a long period of demand moderation, as a result of which earnings estimates have been cut for most companies, barring perhaps a Westlife. So is QSR a theme that you like? And is this just a festive play which could run out in the next 6 to 9 months?
Right. So as you rightly said, we are quite overweight and very positive on consumer discretionary names. But within the consumer discretionary names, We are more focused on, say, for example, apparel, footwear, jewelry kind of names. And we are not so very positive on QSR as a space. We feel QSR is a highly crowded space. While the gross margins appear to be very high, at the net level, it's a highly competitive business and a very overcrowded space. And valuations are still very, very, very expensive. QSR, we've actually avoided that space for like at least about 2-3 years now, and we continue to avoid that space.
All right, Pawan, we'll leave it on that note. Thank you very much for joining in today. We have the numbers out, and there's a bit of a